All right, let's charge some stuff. Let's have some fun. Let's get some reality out there. Let's try to help people make some money. Try to help people make rational decisions. See if we can do some good. All right, so we had a crazy sell-off this morning on just about everything. Crypto crash, Bitcoin crash, everybody freaking out. Red candles everywhere. Look at this huge gap down. Immediately just bought back up like crazy with authority. Gapped all the way down on the S&P 500 to about 35.92, and then just went back up like crazy. So the pre-market, actually, if you were up early, pre-market was up, futures were up. A lot of people had a chance to sell things this morning at a profit from positions they had been dollar cost averaging, aka DCAing. When you hear people say DCA, that means dollar cost average your position down. If you have a higher position, you continue to buy at a lower price, your average cost value comes down. It's that much sooner you get back into profit. That's what you're shooting for. You want to make the profits. Let's make that money. Let's pay those bills. Let's set up that retirement. Let's get farther ahead in these bad times. So, anyways, back to what we were saying. We had people, including myself. I was up early this morning. I was already selling pre-market on positions that I've managed to DCA down into a lower zone throughout this week. Yesterday was very helpful for that as well. And then this morning they were opening in the green, sold them off, or at least took profits, reduced some exposure. And literally I made a post at one point where I said 90 seconds ago I was selling in a profit, now I'm rebuying a dip. I mean, I didn't have to wait for it to come back down to a point. It sold off so fast that you were just automatically back into a buy zone, and as of today back into a profit again. It's just, if you've been on top of these markets and you're up early and you're getting things done and you're dollar cost averaging when you need to, these up and down swings, they can give you a lot of room to play and trade in between. And you can make a couple trades a day rather than a couple trades a month if you're in there at the right time and getting out at the right time. If you get too greedy and you've seen the futures open this morning and things were green, and then you just start thinking like a moon boy and you're going straight to the sky and you're going to make a ton more money, then that might have hurt you because you watched it going up, you took no money, and then it crashed right back down when the stock market opened, and we knew we were getting crazy news today. So definitely have realistic expectations out there with trying to make money. And I always like to tell people a simple thing to pay attention to. And you can find this chart somewhere, online if you Google it. Google what happens if you can make 2%. That's all you need. You don't need, 100,000x gains every day. If you can start with $1,000 and you can make 2% per day for 1 year, that's it, 365 trades. And if you can't do it in a year, or you need more time to be cautious, then just stretch that out. You could say, as long as I make 2% every 2 days, it's going to take you 2 years, every 3 days, 3 years, 5 days, 5 years, whatever. But you can take $1,000, and if you can make 365 trades at 2% with that money, you can turn $1,000 into $1 million. If you do it every day, you could do it in a year. If you increase those numbers, then obviously you can do it faster. If you take $1,000 and you can make 20% on a trade, well, now you've just eaten up the first 20 days out of your 365 days in a year. And start thinking along those bases, and you'll start seeing how capable it can become for you to turn $1,000 into 1 million if that's all you've got to work with. Or apply that theory to whatever your balance is. If you can only come up with $10, then turn that 10 into 100,000 or something in a year. Just use that formula. Though I think it's helpful to people to pay attention to simple realities like that with compounding interest and where it gets them. But let's get back to talking about this S&P 500 real quick. Basically, we sold off like crazy, as I was saying, and we've been buying that dip back up aggressively. It looks like this is not just retail. Institutional traders are stepping back in and buying these stocks. And I believe in later reports you'll find that at these prices, a lot of companies are stepping back in and buying their own stocks. You are now, with most companies, getting back to pre-pandemic levels or right at the pandemic levels, somewhere in there. Most things are down below the June lows, which were also known as a great time to buy. And in the grander scheme of things, if you're looking, even at a broader range of stocks, and you really start paying attention to stocks, you can find yourself some stocks, quality names. These are not like, penny stocks, or something highly skeptical, or, you're like, oh, that's tech, it's going nowhere again. You can find quality stocks that are not just at pre-pandemic lows, they're at lows of like 3 to 5 years. Look at things like, Walgreens, Verizon. There's several of them out there. If I started to pull out my list, I got a list somewhere, but you'd be surprised when you're on a video and you're a little bit nervous how intense it can be, and you'll make the simplest of mistakes. I mean, people might watch the video and go, oh, that guy doesn't even know how to talk properly, or that guy doesn't even know what a liquidity pool is when he was trying to describe where the money's going in a crypto or something. And it's not that. It's really just I don't know. It's kind of like a self-conscious thing. I think when you're doing a video, it's just hard. So, anyways, getting off track there. So, anyways, getting back to what I was saying is, depending on what you're looking at, you can find stocks like 3M that are, hitting lows that are, they're low from 3 to 5 years ago. You've erased all the pandemic drama already, and now they're just getting hit hard. And these are stocks, also, Unity, Coinbase, Zillow. These are other stocks that I've got up on. I'm starting to look around. I've got notes on boards around here. These are stocks that are also at great lows. And even if you don't believe in them long term, or I agree, they could still go much lower. They're good for short term swing trades, relief bounces, things of that nature. And also, a lot of stocks that are attached to the crypto market or a crypto narrative, even once the stock market stops bouncing in a certain way, you can watch those move based off of crypto narratives and take that to your advantage as well. So always be looking for all the different ways that you can take advantage of these different ways to make money in the stock market, the crypto market, Web3. This up and coming, kind of like Web3 blockchain crypto movement that's going to kind of take over the scene. Basically, it's like getting into the internet in the early 2000s, and most people regret not paying attention to that. I remember being a guy who said, "Oh, I'm never gonna have an email, and I don't want a computer. I don't have time for that, and I'll probably, never do email." And then I remember the first time I had to email with somebody back in the day, where you'd actually get a beep and you've got mail. And I mean, it's crazy how fast these things happen. So if you're not paying attention to blockchain, Web3 companies, that are developing future technology, things of that nature, cryptocurrencies, tech stocks, then you're missing out on, some of the biggest and best gains that are going to happen in your lifetime right now. So, anyways, getting back to this S&P 500, we're back up into the ranges that we told everybody to pay attention to, and that green line up there, still around 3,700, is still where you should be watching to take aggressive profits. The top that we're in right now, around the 3667 range, if you look left, coincides with other points that we've pulled back. That should be watched for too if you're trading this right now. In the grander scheme of things, if you go back and look at some of our other videos and some of the updates we've given you on the S&P 500, we've also told you that this is a major resistance line, that even if we blast up into here, this is aggressive taking profit ranges for me. And if it was to get real crazy and get up to here, I'm not just going to believe we're going back to 4,500. I would probably liquidate most of my positions into a profit, wait for a pullback, and determine, depending on narratives and chart structure, if I think I'm going to enter a new position. And if not, maybe sit on my hands for a minute and wait till the next drama happens, until we start building support in areas, not just, scam candles, scam wicks, and momentary pumps. You don't want to, look too much towards, I don't know. I like to keep saying, have realistic expectations. Don't just start becoming a moon boy. Don't just start becoming overly bullish and get yourself wrecked. Remember, for every really good bull argument and every really good bullish case, there is an equally or better bearish argument and bear case. And if you are not paying attention to both narratives, you're not doing yourself any good. If you're on Twitter, you should be following people that are, a good bull and a good bear. Same thing with on TradingView. If you're on TradingView, it seems to have a lot of good community. TradingView is really starting to become a social platform. And, I used to feel that you just use TradingView for charting and then take that somewhere else. TradingView is really trying to step up their game on a social level. I mean, who knows what the future is going to become? I mean, next thing you know, people will be talking about, shopping from TradingView possibly, and, making moves on TradingView, and, it become like, I mean, maybe it's crazy theory, but I mean, what if TradingView, because of the fact that trading in general is becoming so popular, and these younger generations don't seem to trust the stock market nearly as much as the older generations, but they do seem to be interested in cryptocurrencies and things of that nature. Well, what if, TradingView all of a sudden becomes more popular than Facebook Meta? What if all of a sudden, people are like, hey, I don't like charting, I don't care much for trading, but man, all my people are over on TradingView. You just don't know. These are such crazy times, and TradingView has a huge future in front of it. So, the point of that was, if you're not a Twitter person, maybe become a TradingView person. And if you don't like YouTube videos, maybe pay attention to just TradingView videos. If you only are worried about getting information that is, prevalent to markets, maybe TradingView is the best place for you to be doing that, and not just looking at them as a charting facility. So, as much as I could continue to go on to that and get into other creative ideas, that wasn't really the point of this video. I'm a bit of a salesman myself, and also an idealist. Next thing you know, I have all kinds of crazy ideas for people. Start tweeting Elon Musk some stuff. So, anyways, keep these realistic expectations in mind. I would be pulling profits in these zones still. I would still watch for this to be heavy resistance. These support lines have been broken. I mean, there's a very good chance that if we get, really bad news tomorrow, which is also very likely, that these support levels down here at the 3,500 don't hold and we blast right back through. This could be a very momentary moment for you to make profits and, take some risk off the table, or even better than that, take profits off the table and put them in your bank account for later. And if nothing else, just make your credit portfolio, and by credit I mean your buying power more powerful going forward. So you can buy more stocks, buy more crypto. Don't just once again start thinking this is going crazy up into these zones. Can this pump up here in the next couple of days? Yes, it can. Is it very likely that we start seeing resistance? Yes, it is. Is it more likely here? Yes, it is. Do you need me to put a big huge hammer logo up here to make you feel that? I don't know. Let me know. Do you need me to draw extra squiggly lines again showing you going down here? We can do that too. But if you go back and you look at some of my other videos and you look at some of my other charts, I showed you all this just like that. In prior charts, it seems that maybe the one I pulled up, maybe the wrong S&P or something, or wrong time frame, whatever. I have too many different screens open, too many different workstations from different areas. But there's other videos and other charts I posted that you can find a few days ago where I charted all this out. I mean, you can even go back a week ago and you can find charts where I told you when you came up that you would most likely come up into these areas, and that when you did, you'd most likely get rejected. And then I told you when you come down into these areas, there's a big, huge question mark. And if you find the right video and the right charts, you can see that I posted big, huge question marks on these lines of support and told you there's a good chance they do not hold. So, take all that into accountability, and remember that knowledge is power. If you want to trade these markets, definitely try to educate yourself, or at least follow people that are trying to help educate others or educate you. Do not just throw money around blindly. If you want to do that, I think that you might have far greater results just trading wild options, or worse than that or different than that, just have some fun, go to Reno, go to Vegas, go to Atlantic City, and play some craps, play some roulette, and let's get it done. I'm not opposed to those things either. I'm not making fun of any gamblers here. I love all that shit myself too. Oh, just use the sh word. One of my videos gonna get flagged for that. So anyways, yeah, hopefully that didn't ruin the video. So anyways, you guys be careful out there. Trade wisely, trade cautiously. And remember that we're still in a downtrend. We're still in a downward trend. We are still in a bear market. We have not found a legitimate bottom yet. And do not get carried away, because most of these people have told you that you are in a bottom or have found a bottom. We have made new lows in most stocks. We have made new lows on the NASDAQ and the S&P, and we continue to push most all cryptos down to new lows as well, or at least going back and touching on June lows, which were scary and crazy for most people. So you guys stay safe out there and trade wisely, trade safely, and remember, capital preservation is most important in these times. Live to fight another